Hey everybody, thanks for joining us here at Alpha Cave. We're going to talk about stocks, but we're going to talk about options. Thanks to Robinhood, we've been able to buy stocks without commissions and selling them without commissions and doing great with that. And that's really benefiting everybody that's investing now. And there's a more than usual, more than ever now at this point, investing into the stock market. And it's great, and we're doing fantastic investing into the stocks. However, we need to go beyond just buying stocks and selling stocks. And over the last few years, I've realized, yes, we're going to do good doing this in the long run. But if you really want to accumulate more wealth faster, and you've heard a lot of people say it, do options. Now, options, it's a little scary at first because you're afraid to lose money, right? We're not investing to lose money. We're not investing to lose money at all. We want to gain and build our wealth so that we can retire hopefully early. But if you do it correctly, I think you'll do fine. So I've, over the last few years, decided to look into it more. And there's been months that I really look into it. I start studying and I look at everything and I see how you're going to do it. And then I don't jump in. Well, at the end of 2020 here, going into 2021, I've started to jump in now. And I want to do it as safe as possible because I still consider myself a beginner at this, at investing into options. Now, remember, we're not experts in investing here, but we look for different ways to invest to make sure that we actually maximize our profits. And I believe that this is the best way to invest into options at this time. So let's talk about that. First, before I get into what I think is probably the safest way to buy an option, let's discuss what an option is. And I'm sure that a lot of you know this, that one option equals 100 shares. So if you're going to say, I bought an option, you're talking about 100 shares that you're going to be playing with at that time, right? So it's either one option is going to equal 100 shares that you're going to buy or that you're going to sell, one of the two. So you're going to need enough startup cash to buy options. And if you're dealing with shares that are about $10 or $9, then $900 to $1,000 is going to be enough to start with that first option so that you can move on from there. But I think no matter what you have, I think you want to jump in, you want to start out because you're going to make more money this way, and it's probably safer. So now let's talk about the type of option that I'm going to be doing and how I'm going to do that. First of all, it's very important to find a stock that you're very comfortable with. Know your stock, know that company, know its past, know how the stock price moves up and down throughout the years, throughout the certain months, so that you know more or less what to expect from that stock. Of course, there's always news that it's going to throw it off and you just don't know and you can't really predict some of those things that are going to happen. But try to know your stock as best as possible. Know that company. And if you do like that company, then that would be a stock that you're very comfortable having, then that'd be great. Then that's something that maybe you can invest in. However, you also want to make sure that it's a company that you think that the stock price is going to go up. If you think that it's going to go up and this stock is going to be successful, then that's actually a very good stock to start doing your options with. So let's talk about having $1,000 and trying to make an option buy or a sale. Now, I'm not going to get very complicated because I want to make it as simple as possible so that you can actually go and say, hey, I can do this and I can do it right now. So this is the way I'm going to do it. First of all, I've picked a stock that I like and I am going to sell puts. Now, selling a put means that I'm telling somebody, it's called writing a contract. Basically, I'm telling somebody I'm going to buy shares at this price. So no matter if it goes up or down, I'm willing to buy the shares at this price. And that's one option I'm going to buy. So that means I will buy 100 shares. And by by putting that price there, somebody's going to pay you as if you're their insurance. Basically. So say they pay you $100 so that they can guarantee that you're going to buy those shares. So now that the price of the stock you're going to buy it is $10 per share. However, because of the $100, you're actually going to be paying $9 a share, right? So you're saving on that. Now, say the price drops by that certain date that you have. Usually, I like to put it out about a month out, 2 weeks to a month out. That way, every month I want to repeat and make more money. So let's say that the price drops to $8.50 and they decide, yep, I want my $10 per share. And you have to buy it at $10 per share, okay? So you actually paid $9 per share because you got the $100 from them. However, now you bought it at $8.50, so you kind of lost a little money there, right? Well, what then I will do in turn is I will sell a call. Now, selling a call means that I want to sell a stock at $9. And no matter if that price goes higher or lower, I want to sell it at $9 and somebody's going to pay me money to buy it at $9. They're expecting that price of that stock, which is a good stock, to go higher than $9. And so they'll say, yeah, I'll give you $50 to buy that stock at that price. Or they'll give you $100 or whatever the price is for that call option. And once you get that money, then if the price goes higher than 9, say it goes to 9.50, 10, whatever, if they want to buy it at 9, then they're going to buy it at $9 from you. Now, the way to make money on this and to at least break even sometimes is making sure you have enough leverage on there. So you're making money by selling the put, and if, say for instance, that expires and you don't have to actually buy those shares, then you made that money with no problems. That goes into your account. But if you did have to buy the shares, then you can turn around and sell a call so that you can put your price that you want to sell them at, get some money for wanting to sell it at that price. And if, for instance, that call expires, then you can turn around and put another call and make more money off those shares that you have. So it can be a cycle. Now, once those shares actually sell, then you're done with that cycle of those 100 shares from the put to the call and back out. Ideally, you sell a put and you don't have to buy the shares ever, right? So you can make money without buying shares at all. And that's actually a good plan to have. But if you buy the shares, it's going to be a company that you wanted. It's going to be at a better price. And then you'll be able to sell them hopefully at a better price because you expect this company to continue to do well and for the prices to go higher. In short, we're talking about selling a put, and if you have to end up buying those shares, selling a call, and getting rid of those shares. It's a very good plan to try to make money. It's a very good plan to execute if you find the right stock that you feel very comfortable with and that you feel is going to continue to go up in price. I think you can do very well with this formula. I'm going to try to show you a little bit with a stock. Let's pick Ford, and we're going to see how you can sell a put and sell a call and see how you do with that. Okay. So let's start here with Ford. This is a good example here. It's not a very expensive stock. As you can see down at the bottom here, we have the share price of $9.24. And so that allows you to have about $1,000 so that you can start with your first selling of a put. So you pick selling a put. You're going to pick how far out. Of course, right now we're December 2nd. Here we picked December 31st. So about a month out. And you look at the different prices that you would want to buy a stock at. Now this is Ford. We know usually Ford has ranged from $6 to about $9, goes back down to $8. in that range. So you would want to play conservatively and say, okay, I think I can buy this stock comfortably at $9 or $9.50. So you will be buying 100 shares. So that's going to be either $900 or $950 that you need to have ready so that you can buy your 100 shares if you're called to do so. So in this case, say that you're a little brave and you say, I'll pay $9.50 per share. So they're going to pay you 57 cents per share. So that's $57 that you will receive if you're willing to pay this much. Now, if the price goes under this break even, under $8.93, by the time this is going to expire, which is going to be on December 31st, somebody might decide to say, I'm going to sell these shares, and you're going to have to buy them at $9.50 per share. And your break even would be $8.93. Now, say that you bought the shares and say they were at $8.50. So really, you lost about 43 cents per share. Okay. Now let's go and sell a call. So let's go do that. So now in this case, we're going to sell a call. Now remember, you paid about $8.50 per share. And say that you want to sell your shares at $9. Okay, so you're going to put a $9 call, which in this case, you're selling the call, which means that you will sell your shares at $9 per share, all 100 shares, which would be $900. And somebody, if they would want the shares at that level because they think that the price is going to keep on going up, they're going to pay you 51 cents per share or $51. So therefore, your break even would be at $9.51. So if it goes to $9.51, and they sell it at $9, you're breaking even because you got $51 already. However, it goes to 10 or 11, you're going to be making less than if you would sell them at 10 or 11. However, you're going to be making money because remember that you bought them at $8 and change. So that's the difference here. And of course, when you're going to sell the call, you're also going to pick sell call. This is of course on Robinhood. You pick the date for when you want to do it. And if they sell, perfect. If they don't sell, then you put them right back again and sell another call. And keep on making this money every 2 weeks or every month, however you want to set your dates. And as long as it sells and it's competitive, you're going to do fine. So guys, we're not experts here, but we do want to try to do our best to make you successful, make us successful, and have everybody learn how to do this because the world has changed. The way we make money changes now. We've actually been invited into this whole world of investment. And I think that we all should take advantage of that and do as best as we can and try to succeed at this. Guys, if you have not subscribed to our channel here at Alpha Cave, man, we talk stocks, we talk sports, we talk a lot of different things. We do videos on hobbies that we like. So we want to diversify as much as possible because there's a lot of things we like doing. And if you guys have any ideas for us, let us know, man, because we're willing to do videos on a lot of different topics. You guys take care. Hopefully we'll be making more videos before Christmas and New Year's. If not, have a Merry Christmas and a Happy New Year, and we'll see you soon.